This week on Wealth Track, successfully navigating Wall Street, investment strategy, and stock picking, with a man who has mastered all three. BlackRock's Vice Chairman, Global Chief Equity Strategist, and Large Cap Money Manager Bob Dahl is next on Consuelo Mac Wealth Track. What are some of the themes that you've identified that you think are going to be with us in 2010, and how much are they helping you focus the way you're going to invest in your large cap funds?
Well, let's take a good example for where we are in the business cycle. Stimulus is plentiful. The government, not just the U.S., globally has provided monetary and fiscal stimulus. Guess what? A lot of that's finding its way into the financial markets. That's a wind at our back. That's an important concept not to lose sight of. It's so easy to think about this negative and that negative, but this is a powerful tailwind. So as a very simple concept, I want to make sure I don't lose, nor in my communication to investors lose, the concept that this is powerful. When stimulus is plentiful, financial markets tend to do well.
But Bob, the stimulus at some point, everyone's talking about the stimulus is going to be withdrawn. So, in fact, isn't that a huge risk and uncertainty in the outlook for 2010? It
is. The transition could be a problem, no question about it. But look, that transition, we believe, comes when the economy has self-sustaining mechanisms. Let's look at when the peak stimulus was being applied. It is when the world was concerned that we were going to have a depression and we're going to have to nationalize the financial system. As investors and the general public have reduced fear of those things and begun to restore confidence in things. We're not back to normal, but begun to restore confidence. Guess what? That stimulus becomes a little less important. So I believe that as the typical business cycle goes by, what happens is the stimulus does get withdrawn as other things are replacing it. Exports, business investment. Yes, there'll still be some government spending, but there are sectors of the economy that will win and grow.
All right. So how are you applying that thought, that thought process, to the investing and the actual investment process?
Well, again, as you choose individual securities from a bottom-up standpoint, I believe you need to filter them through these top-down thoughts. You don't want to invest in a vacuum. Now, there are a lot of great stock pickers, and I'm not disparaging them at all, and consider our team stock pickers as well. But when we want to make sure that the things that we think, I'll use the phrase again, are wind at our back, are part of why we're selecting a security, rather than the things that might be wind in our face. For example, the consumer. The consumer is struggling in the United States. It's going to grow this year, but not by a typical pace. So let's not be overly exposed to the U.S. consumer. That's a macro thought that as we identify, let's say, retail companies and media companies and other U.S. domestic companies, we don't overdo it in that area because we find a lot of cheap companies. They're cheap for a reason.
So one of your projections or predictions as well for 2010 is that the emerging markets are going to once again outperform the developed markets.
Yes.
So what kind of allocation do you think that individual investors should have towards emerging markets, which we had a guest on recently with you a couple of weeks ago who said that he felt that the emerging markets were actually overvalued?
Yes, they're overvalued if they don't deliver. But our view is they will deliver. We think growth in 2010 in the developed world will be 2.5% at best. In the emerging world, more than 5%. That GDP differential will lead to huge earnings differential, and therefore emerging markets we think outperform. There are two ways at least to play the emerging markets. One, go there directly, and that was your question. I would say a double-digit percentage should be invested in emerging markets, at least 10, some as much as 20 that are more aggressive. The other way is good old multinationals, whether they're headquartered in the U.S., Europe, or Japan, or somewhere else, that sell into that part of the world. This will be a profitable investment as well, in our view.